Hello traders, the title of this video is Financial Market Trader Shares Advanced Fibonacci Extension Tips. Financial Market Trader Shares Advanced Fibonacci Extension Tips. Let's get started. We're on the weekly chart of U.S. Steel Corporation, U.S. Steel Corporation. The epic is X. Alright, you see here, X as X-ray. That's the epic of that stock. U.S. Steel Corporation, belonging to the sector of basic material sector. This is a Russell 1000 component. And today we want to talk about, advanced Fibonacci extensions tips. All right, so to apply one of the tips that I want to share with traders is that we go to the yearly chart. All right, and then we apply Fibonacci extension to the range of the previous year. So because today is the 20th of December 2016, in fact, because we are in 2016, we will apply the Fibonacci extensions to the prior year, which is 2015. So next year, 2017, we will be applying the Fibonacci extension to the range of 2016. Understand that, okay? So we apply the Fibonacci extensions to the prior year, in this case to 2015, because we are in 2016 now. And then we highlight, the Fibonacci extension level. You can see the 138.2% Fibonacci extension level. We have the 161.8% Fibonacci extension level, the 200% Fibonacci extension level, the 261.8% Fibonacci extension level, and the 314% Fibonacci extension level. Just highlight all the Fibonacci extension level. Alright, so at the beginning of the year 2016, we will do that. But one more thing, my friend, those Fibonacci extension key levels will become useful when the price either breaks above the high of the prior year, or if the price breaks below the low of the prior year. So the way I draw my Fibonacci extension, the way I apply my Fibonacci extension to this level, you can see that my Fibonacci extension key level are above the high of the prior year. Now those Fibonacci extension level are now useful to us because the price has now broken above the high of last year. But if the price instead was going down and it breaks below the low of the prior year, then we will change how we draw our Fibonacci extension in order to have our Fibonacci extensions below the low of the price. So they are here somewhere down here. We cannot see on the yearly chart, but you can be sure that if you apply the other way around, the upside down, you will see that the Fibonacci extension will be below the low of the prior year. Now the only time that we will do that is when the price breaks below the low of the prior year. Then we want to make sure that our Fibonacci extension line are below that low. But if the price breaks above the high of that candlestick bar, we will draw the Fibonacci extension in a way that the Fibonacci extension key levels are above the high of last year. Am I making sense? So you can see them now here, they are above it. If the price went below the low of the prior year, we will have done it the other way around. So we may have our Fibonacci extension line below it. Very important. So now that we have done it now on the yearly chart, though we can apply this strategy on any time frame, I will prefer that trader use the yearly chart. So you may say to me, Joe, which trading software are you using? Which charting software I'm using? I'm using TC2000. Alright? If you cannot see the yearly chart, then you may use the quarterly chart. But myself personally, I will use the yearly chart. So what are we looking for? As you can see, the price breaks above the high of last year, is heading up. We want to know where are the Fibonacci extensions leveled for the last year. So from the yearly chart, what I recommend to swing traders is to go not to the daily chart but to the weekly chart. So you see here, so this is 138.2%. That's the first line here. I'm going to color it down into red. That's where the price is now. Look, on the weekly chart, as you can see, so beginning of the year 2016, here we are. Okay, price went up, okay, going up. Now it breaks above the high of last year. From here onward, it breaks above. So we are now applying the Fibonacci extension to the last year, and this is the 138.2% Fibonacci extension level. You can see that the price went almost near the 161.8% Fibonacci extension level, where some traders sold it, and it closed at the 138.2% level. So there are orders here to sell in that zone. Those orders were filled, and the price came down for 1 week. Look, the following week, the price rallied up to retest, okay, the same level. So what is happening now is that the price, that it breaks below that 138.2% level. Now it's retesting it now. So we will wait for this candlestick bar to close because it's not yet closed. Today is Tuesday, yes or no? All right, today is Tuesday. So we can't play it yet. The trading setup is not yet ready. So we'll wait for this candlestick bar to close. So the following week we'll come back, and this will constitute a bearish trading setup. So we will say to traders, priority to bearish signal below $36.20 and priority to bullish signal above it. And we will implement a top-down trading method to sell it below or to buy it above it. Because what has happened here, price went up to the 138.2% level, found a resistance, come back down. Now it's retesting it. We want this candle to close, and then next week we'll put this stock on our bullish and bearish watch list. Why? Because if it goes above the $36.20, a final support, breaks above, retest, then around, that will be a bullish trading setup. But as it is now, it breaks below it, it retesting it, this candlestick bar is closed. The first thing that is coming to our mind is to sell. We will implement a top-down trading method to trade it. Now that we are on a weekly chart, the weekly chart will constitute our trading setup. We'll use the 2-hour time frame for the signal and the 15-minute time frame for the entry. So you may say to me, George, I don't know how to do that. Then I will refer you to another video that I recorded today. Okay, is Fibonacci Trader reveals an advanced Fibonacci retracement trading strategy. Fibonacci Trader reveals an advanced, okay, Fibonacci retracement trading strategy. If you watch that video, is a little bit okay, I'm talking about advanced Fibonacci retracement trading method, but it will help you to know a little bit how you can implement a top-down trading method, a different time frame trading method for this trading strategy. All right, because I don't want to talk about it again for the second time. All right, here it is. All right, beautiful. All right, so I'm going to bring on now another financial instrument, and we'll look at it. So apart from the U.S. Steel Corporation, Epic X, a Russell 1000 component, there is another stock here, Tech. This is again a Russell 1000 component. The name of that stock is Tech Resources Limited. Tech Resources Limited. The Epic is TECK. Tango Eco Charlie Kilo. So now that we have it here, as I told you, all right, I would prefer that trader use the yearly chart. But if you do not have the yearly chart, you can use the quarterly chart. So what I meant, that's why I'm referring you back to that video, very important video. Fibonacci Trader reveals an advanced Fibonacci retracement trading strategy. That will clarify everything to you that you need to know, okay, more. All right. If you were on a quarterly chart, I'm now on a quarterly chart. You see now, you will have applied Fibonacci extension to this candlestick bar here, the last quarter. Okay, and then you will try to day trade or swing trade, even scalp trade around those Fibonacci extension that we apply to the last quarter, this quarter here, the quarter before this one. Alright, we can do that again on the monthly chart. But personally, whether we are using this strategy for day trading, swing trading, even for scalping, for swing trading mainly, I would prefer that trader use the yearly chart. So now let's go to the yearly chart. I have already done it, so I apply Fibonacci extension to the last year, 2015, and as you can see, those key levels will only be useful to us if the price breaks above the high of last year. If the price dip below the low of last year, we will have drawn our Fibonacci extension upside down in a way that the Fibonacci extension level are below the low of this low here. All right. So you can see, so those are the Fibonacci extension level, okay? So what do we need to do next? We go to week time frame, weekly chart, looking for trading setup, not trading signal. So we are now on the weekly chart. Here we are now on the weekly chart. And as you can see, 2016 has started here. So at the beginning of 2016, that's when we draw all this line ready. So here it is, boom, 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 boom. It's going a beautiful move up, quite strong move. You can see that the price is not pulling back very much. This trend line, this common center line was very, very good. All right. So price was riding along nicely this bullish trend line without too much deviation. Can you see that? Up to this point, there was not too much deviation. The price was just going a little bit away from the trend line, pull back, a little bit away from the trend line, pull back, a little bit away from the trend line, and then pull back, a little bit away from the... Now here we are. This is the extension. This is the big deviation. Suddenly, the price ran away from the trend line. Can you see the deviation? This is quite a huge deviation to the trend line in comparison to those short deviation. You can see here, it's not big deviation, no very big deviation either here. All right, but suddenly we see a very big deviation pushing the price far away from the bullish trend line. So the price went above which level? The 200% Fibonacci. All right, you see here it went above the 200% Fibonacci extension level right here. Remember there was a resistance here before. You see there was a resistance here before, and the price pierced to there was a resistance here. I'm talking about the 200 level. That's level here. There was a resistance there before, a resistance there. Price they running fast because what has happened here? They push it very fast. This is an uptrend because too many orders were packed here. Okay, the market makers must fill those orders. So those orders were behaving like a magnet and forcing the price to go higher to fill those orders. You see here? So as those orders were filled, you see the long shadow here, plus the bearish body for this candlestick bar. You see here? It ran fast. Orders were filled. Order to sell, orders to sell, order fill, phew. Look, closed bearishly. This candlestick bar was originally bullish, only to be met by a strong bearish pressure that pushed it back down, and it closed again very bearish, quite volatile candlestick bar. But you can see that as we have applied the Fibonacci extensions to the range of last year, we have on our chart already the 138.2% level, the 161.8% Fibonacci extension level, and the 200% level. Very important. For the yearly chart, understand this, all right? If the range of last year, all right, which is this one from here to here, is the range of last year. Any stock, remember, that has reached the 200% Fibonacci retracement level of last year, there will be a profit taken. Why? Why? All right. So professionals know how far they know the range of last year. Now, if in the following year they notice that the stock has now achieved 200% of the previous year, there will be a reaction. All right, because they know, well, this stock was bearish before, the range was this one. Now we have closed the gap, which means closed the range of last year when we reached the 100% level. Now we went above the high of last year and we achieved the same range, which is 200% level. There will be a reaction unless, okay, one is a stupid investor. You buy stock, all right, and it make a 200%, okay, 200% profit, all right. You want to secure your gain and cash out. So in fact, what has happened here, they push it. Another thing I need to mention to traders, whenever you see two Fibonacci key level, as I was telling you before, relating to the channels, anytime you see a channel, remember the median line, any channel, rising channel, declining channel, horizontal channel, always pay attention to the median line of the channel. The same rule is also true for the Fibonacci extension level or Fibonacci retracement level also. You see here, now that anytime you see two Fibonacci extension level, it's a channel. Don't forget the median line. All right, don't forget the median. You see how the median line of the median line between okay, the 261.8% Fibonacci extension level and the 200% level, that's where it stops. Alright, so be aware of the median line between two Fibonacci extension level. But the point I want to make here is that there was a bearish trading setup. You see the long shadow all the way here, telling that order will fail to sell before this kind of close. It's telling that there is a bearish trading setup in a zone of 200%. You may call it whatever, 250, 200, okay, in a zone of 200% Fibonacci extension level. So price came down. Now this candlestick bar is a bit long. We want to sell. We want to sell near the low of the first candlestick bar, or near the median line of that candlestick bar, waiting for a rally near the median line of the range of this candlestick bar, and then we will implement a top-down trading method to trade. As you can see, the price rally up a bit, couldn't reach the 50% level, but it slowly back down. And that's where we are now. Also, the price break now, look carefully, the price also breaks below that green, that beautiful trend line. Now it's retesting it here on the weekly chart. So when this candle is closed on Friday, on Monday, next Monday, swing trader position, technical traders will be giving priority to bearish signal, all right, below the 138.2% Fibonacci extension level, using different time frame trading method to control the risk. So you see here, this is 38.2%. If I move, that's the one. So price breaks below, retest. Once this candle is closed on Friday, the following day, okay, trading day, which is Monday, people will be looking for opportunity to sell below the 2152. Alright, and again looking for an opportunity to buy above 2152. Alright, it makes sense? Very simple and also very powerful. Draw the Fibonacci extension to the range of last year and highlight the Fibonacci extension level. You may do it both ways in order to have the Fibonacci extension above the high and also below the low of that candlestick bar, and then you switch to the weekly chart looking for trading setup in the vicinity of those Fibonacci extension level. Alright, this is the end of this tutorial talking about financial market trader share advanced Fibonacci extension tips. In all cases, whenever we identify a trading setup, we must use different time frame trading method. Though this strategy is valid on all time frame, I will prefer that trader use the weekly, the yearly chart. Once we apply the Fibonacci extension on the yearly chart, we must go to the weekly chart looking for trading setup in the vicinity of those Fibonacci extension level. We can apply it on the quarterly chart, but be gentle. Even on the monthly chart, if you can't see the yearly chart, I feel sorry for you a little bit if you are using the monthly chart. We can apply this. So you may say to me, George, I'm a day trader, I don't use the yearly chart. You will use the yearly chart as a day trader. Alright? So if the price rally, you see here, it breaks below retest. We are now on which time frame? Weekly chart. Can a day trader trade this? Yes. So you see the intersection between the brown line and the green line. Let's go, for instance, to the 2-hour time frame, which I prefer. Let's see what's happening here. You see the intersection? This was up. This is, you see here, price breaks below and retest the edge. This is on a 2-hour time frame. All right. All right. Now you can go to the 50-minute time frame to monitor it here. Here we are. So the common center line here on the 50-minute time frame. You draw your channel. You see here. There's a channel like this, and we can connect this one. Hold on, please, traders. As I'm adjusting my mouse, not my mouth, but my mouse. All right. You see here. Okay. Here we are. All right. Break above. All right. Now we are on the edge of that green trend line. Okay. If you want to buy, we want to buy above the $21.52. Alright, but as you can see, there is also this bearish trend line on the 2-hour time frame. Alright, if you have any question or suggestion, alright, put it in the comment section. So as a day trader, you can capitalize on those trading setup. Here it is retesting now as a day trader. Okay, though the time of the day is not suitable for day trading now, 17:30 p.m. in London. London is now closed. It's the best time for day trading. You may wait until the market is open tomorrow and then see whether it's going to find a support and go up to retest the red trend line or not. Alright. We are the GSTW24 traders talking about financial market trader, shares, advanced Fibonacci extensions, tips. Happy trading to you all and speak to you soon.